Gold One International came out with its results earlier today, its quarterly results. Here's some of the highlights according to my screen. It says group operating cash flow came in at 24.2 million US dollars. The cash balance increased by a substantial amount. Group cash costs decreased by 8% and production, interestingly, up 2%. So cost down, production up. That's exactly what a gold miner needs. Let's speak now to Grant Stuart, VP of Investor Relations at Gold One. Grant, were you satisfied with these numbers despite a few operational problems?
Yes, thanks very much, Lindsay. And first of all, apologies from Neil Froneman, who was unable to make it today. But yes, absolutely a fantastic quarter to be able to report on. As you say, ounces up, cost down. That's exactly where we want to go, and that's exactly what we want to do with our Cook operations. I think if we looked at it, 62,000 ounces, 62,493 ounces this quarter, up 2%, on the back of an illegal strike which has really hit Modder East for the entire month of June and is likely to only be rectified through the next quarter. Randfontein surface operations turning around very nicely, producing 10,370 ounces, some 42% above the previous quarter, and then albeit Cook underground operations 2% off, or sorry, 4% off last quarter. They just missed guidance, 26,000 ounces this quarter off 27,000. So yeah, all in all a very good production quarter for us.
What's the state of the play in negotiations with the people involved in the industrial action at Modder East? You say it might go on into the next quarter as well. This is a major stoppage, and your results would have been even better had that not have occurred.
Absolutely. If we look at our trends February through May, we see a continuous increasing trends in terms of grade, tons treated. So yes, I think we would have definitely met guidance this quarter had it not been for the strike at Modder East. We continue to maintain a very strong stance against the union, Patawa specifically, and the intimidation tactics and the violence that they've perpetuated through the June strike. We've obviously dismissed the 1,044 workers, which has impacted production quite dramatically, and you can see that in our quarter. But as you rightly said, we would have definitely achieved guidance had we not had the strike activity. And in terms of going forward, we have got contingency plans in place. We've initiated staffing up contract labour through this quarter, largely recruiting about 5 stoping crews per week, and we're going to be doing that over the next 10 weeks to get up to the 50 crews that we would require to get Modder East back to normal production levels. So we should be seeing normal production from September quarter onwards.
So, I mean, overall, when you look at these numbers, you obviously are quite buoyant about them. The production is up. You've got Randfontein surface operation production increased quarter on quarter by 12%. You've got Cook underground production increasing quarter on quarter by, 42% for Randfontein, 12% for Cook. Where Modder East we've spoken about. The gold price going through 1,600. Okay, the Rand is strong as well. But overall, you seem to be taking these less well-known, less glamorous deposits and operations and doing a good job with them. Can that continue?
Absolutely. I think if you look at the strategy that we've got in place to grow and become a 1 million ounce producer in the very near term, all of the acquisitions that we've made through the Pimorti transactions in the East Rand, all the way up to the Cook assets and the Ezulwini transaction, which we're just about to close now in the West Rand, there's a very clear and specific strategy around those operations. If we look at the Ezulwini transaction specifically, that Ezulwini operation as a standalone operation probably would have continued to perform like it has. What the benefit for Gold One and specifically with the Cook assets is integrating Ezulwini into the Cook operation, so that you've now got Cook 1, 2, 3 and 4, and you're not relying on one operation to produce 200,000 tons a month through that facility that Ezulwini has access to. So very clearly the strategy here is to combine Cook 1, 2 and 3 and 4, use the joint gold and uranium byproduct credits to create a very healthy margin on those operations out in the West Rand. And clearly the Ezulwini transaction offers us immediate access to a uranium facility which will allow us to do that and drop our costs in line with those costs that we're currently seeing at our Modder East operations.
Just very finally, very quick answer if you can. Are there other operations like the ones you're already involved with that are on the market at decent prices that you're eyeing at the moment in South Africa?
Lindsay, we continue to look at every available opportunity, and I'd say yes, there are a number of opportunities that we are looking at, and certainly in line with our value accretive growth strategy. So yes.
Grant, thanks very much for your time this lunchtime. That's Grant Stuart, VP Investor Relations at Gold.